Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today, we're continuing our series on trading psychology. But first, make sure to give us a thumbs up, like, subscribe, and do share it and support the channel so that we could give some free content like this to other users. All right, so let's break it down. So last week, just as a recap, we discussed trading psychology, how it is the element. It's probably the most important element of trading success. And now that is clear on almost everything that we do in life, in relationships, in life, in business, in anything we do. We challenge our values and our beliefs, and it's really based on the ecosystem of how we respond to stimuli, how we respond to certain patterns that we go through. And if there is one thing that the trading markets give us is the potential for patterns. And that's what I want to discuss today. Now, everybody that comes into the trading system has to overcome one major thing. And as I said, you could probably figure out what I'm discussing, and that's really fear, right? Anyone who's first starting out, okay, in anything that they do has a certain level, healthy level of fear. Sometimes it's unhealthy, okay? And those are the two different things. Now, one of the things that really resonated with me after September 11th was in next door to the Twins building, and went through that whole escapade. And there was one of the leaders of the Mercantile Exchange building who said, I don't need to overcome fear, I just need to manage fear. And that's really true, and I've always stuck with me because it's always something that you can't avoid, right? We're made as human beings. If we're in a plane and it's crashing, you're going to feel fear, and that's normal. It's okay. It's just that when fear debilitates us and stops us, we either fight, we flight, or we don't, right? Or we just shut down. And that's the point that we need to overcome. So how do you overcome it in trading? And how do you overcome it in your personal life? And this is really very important, okay? It's incremental. It's not that we don't feel like, oh, losing $100,000, no big deal. It's not that. It's that we build a resistance to it over time that we feel more comfortable. It's incremental, right? I'm okay about losing $1 in my lifetime, right? That's okay. When I first came into trading, one of the best advice one of my friends gave me, and today he's probably worth about $300-400 million. The guy is super successful, a very sweet guy. And he said to me, never put something in the markets that you can't afford to lose. Now that's a fear factor, because if I could lose $1,000, right, and I lost $1,000, it doesn't prevent me from re-entering that market. You don't want to get to a point where you lose something so precious that you can't ever enter it back. That's where it becomes super important, okay? You could lose $1,000, you could maybe lose $500, whatever your increment is, whatever your comfort zone is, but you can't be in a situation where you're losing too much. Now in trading, specifically when you start out, okay, most people that I see who come to the system are trading the same size going in and going out. They're probably trading 0.1 lot, okay? And they're going in and they're going out, 0.1, 0.1, 0.1, 0.1. And there's no incremental, there's no distribution to better trades, okay, to the more profitable trades than to the ones that are creating less success. And that's what is really the secret of overcoming fear. Because if we use the tiering system, okay, and the tiering system is very simple. It's that you're not going all in at once. You're tiering in and you're tiering out, meaning you're slowly building your position in it and you're slowly coming out of the position in it. And the benefits are there. So what does it mean? All right, so let's say I'm trading $100,000, right? So on my first trade, I'll trade $30,000. That's what I'll expose myself. And at that point, if I'm up some money at that stage, then I have a little bit of leeway, right? So I could get a little bit more aggressive and go to my second tier. I could add money into that trade. I'm doubling down at that point, but I'm doubling down to the positive, not to the negative. That's the difference. People have no problems doubling down to negative, but doubling down to positives, they don't do. But this is the secret, okay? Because if that trade does continue to go in the direction that you're trading in, you're making twice as much, right? And then at the end, I put in a third position. So I put in 3 positions in tiering in and tiering out. Now, you could do this in variations. You could add a position, add a second position, sell some of that position, and then get back in, okay, with a higher amount. Okay, you can kind of gauge the market, and that's what it's really used for. It's there to gauge the markets. It's there to give you that comfort zone because you're trading a lower volume, you're trading a lower amount of money in order not to overexpose yourself to the market. And then when you have a little bit of a cushion, you have a little bit of positivity in your account, you could then get a little bit more aggressive. And if you see it's not working out, well, guess what? You could just close the trade and not making any losses. This is such a simple, easy-friendly, so effective way of lessening your exposure to the market, but at the same time, taking advantage of the market, okay? And that's exactly what it is. It's taking advantage of the market because you're not overexposing yourself. You're gauging the market, okay? You're not overexposing yourself, and you're making money as you're trading that particular asset. Very useful, very effective, and try it out. We'll see you here next week on Technical Tuesdays.